Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending July 30th. Welcome to August. We're here. The summer is halfway through. School's starting. Okay, crazy, but wonderful weather right now. Glad you're with us, and let's talk about equities. Equity markets were mixed last week with the benchmark S&P 500 down 0.35%. The Russell 2000 was up 7.76%, and the NASDAQ was down 1.1%. Now, the overseas international developed markets, which is the EFA, rose 0.62%, while the emerging markets dropped 2.48%. So everybody's like, oh, international. Well, different sectors react differently to what's happening. Within the U.S., materials and energy were the best performing sectors, while consumer discretionary and communication services were the laggards. By style, the small cap value was the best performing, while the large cap growth was the laggard. So we've been seeing that going back and forth all year. Value's been winning this year. Small caps come up, so back and forth they go. Let's talk about fixed income. Interest rates declined. Bond values rose last week. The rate on the 10-year Treasury declined 6 basis points to 1.24%, and the yield curve was virtually unchanged. The 30-year fixed mortgage rate was unchanged at 3.01%. Talk about commodities. Oil prices rose last week with the West Texas crude ending at $73.95 per barrel, up 2.61%. The increase was attributed to demand growth at a faster pace than supply growth. Well, I will just say this. If we had a pipeline open, I think we would have more supply. But it's unfortunate that we're already at $3.19 per barrel at the pumps right now. So I think the economy opening, everybody opening, we know the demand's going to be there. We're seeing that, and that's a big thing right now where people are saying, oh, well, this Delta variant, what's happening? You have to understand, everybody wants to get out. All the stimulus spending, all this money in our pockets, people want to spend, they want to travel, they want to get out. So naturally, you're going to see things growing because the earnings are growing. People are spending money. So that's why everybody's like, oh my goodness, what's happening with the market? You know what? Nobody's got that crystal ball, but just by what we're seeing, people having money in their pockets, we're going to see corporate earnings go up. We're going to see the market go up. We're going to see spending go up. We're going to see demand go up. So that's what you're seeing, and that's why you're seeing what we're seeing. The U.S. economy grew at 6.5% annual rate in the spring quarter, which was below expectations of 8.5%, but still the best rate for 2 decades. Why? Because everybody was shut down last year, right? Now, the shortfall was due to 4 factors: the lower inventories of reduced export, real estate broker commissions, and home improvements likely due to higher material costs, right? I mean, if you're going to spend $10 for a 2x4, why would you spend $10 for a 2x4 when it was just $2 just a little bit ago? We're starting to see lumber come back down as well. Let's talk about the eurozone economy. Grew at a faster rate than expected in the second quarter, rising 2% versus the 1.5%, which was a consensus expectation on a year-over-year basis. It did increase 13.7% as the region rebounded with an end of COVID lockdowns. Now, durable goods orders increased in June despite ongoing shortages in parts of labor. New orders rose 0.8% from May, which was below the consensus estimate of 2%. However, the May report was raised to 3.2% from 2.3%. Transportation orders rose 0.3% in June, below the consensus expectations of 0.9% growth. Now, U.S. home prices set another record in May as the national index rose 16.6% over the past year for the 12th consecutive month of gains, up from the prior record of 14.8% set last month among the major cities. Phoenix led the way with a 25.9% year-over-year price increase, followed by San Diego with 24.7% gain. We've been seeing this like crazy in the real estate market. Everybody's giving your highest and best because it's a bidding war every time. Inventory is just not there. Let's talk about Amazon companies, a G33 and a contrarian holding and a core select holding fell 9% last week following a disappointing earnings report and after a new CEO lowered revenue guidance for the current quarter. Dexcom, which is a G33 and a core select holding, rose almost 12% at 11.89 after quarterly results beat expectations, and managers indicated that they are taking market share and will launch a new diabetes management system later this year. PayPal Holdings, which is a G33 and a core select holding, dropped 10.7% after management reported that revenues fell short of expectation and issued disappointing guidance for the current quarter. I wish we had better news, but that's just this week. But we're getting better. We hope and pray you're all doing well. Very thankful for having you part of our family. God bless you. And of course, if you need anything, give us a call. Have any questions at 855-756-5700, or visit us at aradvisorsinc.com. And we'll see you again next week.